And what does war, economic changes, maybe even AI technology, the effects of it on how we make decisions on the investment side, or how you should be thinking as a business as well?
Yeah, if success leaves clues, it's evident that some of the most successful people they have really realized their why and what motivates them, what gives them the enthusiasm to want to be successful.
What got you started in this world, and why is this something that you're excited to continue? Maybe share a little bit about your story as to what got you to become a chief investment officer, and what's been your journey, a little bit about that too.
My background starts from a much more humble beginnings. I come from somewhat of a real estate family, so it was just natural to get involved in real estate in some capacity.
Thank you for joining us here for this video. We've noticed that there are a certain percentage or a high percentage of our audience haven't subscribed to our channel. If you can please click on the button to subscribe to the channel, it will help us create more content. Which will help us reach more amazing people like you, to support them, to serve them. So please click on the subscribe button, and I'll see you on the next video. Thank you. Bye. All right. Welcome everyone on the Ensaun Experience podcast. I have a special guest today, August, who is the Chief Investing Officer of CPI Capital. He's going to be diving deep into what's happening with the economy. How does that affect investing decisions, whether you're an LP or a GP? What does that mean as an investor for you? How should you think about your future investments? And what does war, economic changes, maybe even AI technology, the effects of it on how we make decisions on the investment side, or how you should be thinking as a business as well? Super excited to dive into August's experience. And thank you for being on the podcast today.
Absolutely, my pleasure, Faisal. Thanks for having me.
Yeah, super excited for our conversation. I'd love to just jump in, maybe, and I love starting with this, is what got you started in this world, and why is this something that you're excited to continue? Maybe share a little bit about your story as to what got you to become a chief investment officer, and what's been your journey, a little bit about that too.
Yeah, of course. I mean, at my current capacity as the Chief Investment Officer with CPI Capital, it is a pretty complex industry that we're in. It's where finance meets real estate private equity, so raising capital, putting together funds and what have you. So you usually see large institutions play a part in this business, and the team members are usually highly educated from Ivy League schools in most cases. My background starts from a much more humble beginnings. I come from somewhat of a real estate family. My mother was always involved in real estate, investing in real estate. My maternal grandfather was a real estate broker. This was in Iran many years ago. And so if real estate was a language, I really understood it from an early age. So it was just natural to get involved in real estate in some capacity. So in my early 20s, I got my real estate license, which is usually the path of least resistance when you're getting involved in real estate. I didn't really enjoy the brokerage side of the business, but while being a real estate agent for a little while, I realized there was a lot of deals that as agents you could get your hands on. So I started doing small fix and flips. I started a general contracting company, eventually moved on to actually building from the ground up single family homes, both spec and custom homes. Spec home means a home that you build either with your own funds or with investor capital, and you put it on the market and you sell it. So you're speculating what you can sell that home for. So it's more of an investment. A custom home is when a client hires you to build them their specific home that they want for themselves in most cases. So I did that for close to a decade. Always wanted to scale, always wanted to do bigger projects. And I always saw, Vancouver at the time where I'm originally from was going through a real estate boom, and you could see all these high rises and infrastructure going up. So I always wondered, how are these buildings built? How is, these buildings worth hundreds of millions of dollars that you at least need 1/3 of that in equity to be able to do these projects? How is that possible? And when I was looking around my space, it was always multi-generational families that were achieving this. Somebody who came to this country from Italy or some other place decades ago, and now their grandkids had taken over the throne, and they were building these skyscrapers and high rises and what have you. So I always wondered, didn't want that to take generation. Didn't want my grandkids to be the ones building high rises. I wanted to expedite the process. So I dove deep into the world of syndications and funds, and realized most of the material that was available was in the U.S. In Canada, there wasn't a lot of groups 7 or 8 years ago that were creating content about how syndications are done and funds are put together, and the mechanics of real estate private equity. But in the U.S., there was a lot of firms, and my dream, my vision was to do development, ground up development, large projects like high rise projects like I spoke about. But when I was getting that information from the US, I realized the common business model was multifamily. Over one third of Americans live, they're renters, and approximately more than 10% of the US population lives in apartment communities, mainly in the Sun Belt. They're very common in the Sun Belt, these garden style apartment communities. And the rent to value ratios are much higher than they are in Canada. In commercial real estate, we have a metric called cap rate. So the cap rates were higher on an apples to apples comparison to Canadian properties. And in Canada, there was other issues like regulation and liquidity concerns. So it made a lot more sense to get involved in multifamily. And when I did research at that time, this was in 2019, on the performance of multifamily compared to other asset classes, even outside of real estate, such as equities. And we made a comparison between multifamily and S&P 500. And multifamily in the 20 years prior to 2019 had beaten the S&P 500. So it made a lot of sense. And then we also look around the space in Canada and we realized there wasn't a lot of firms allowing Canadian investors to have exposure to US multifamily. And that was really the spawn, the impetus for us to start CPI Capital with our mandate to allow Canadians to have exposure to US multifamily. And then soon after, we realized that US is a much bigger market. So we start partnering with US investors as well. But that's a somewhat of a quick background.
Yeah, well, that's great. It's interesting. We have something in common. I got pulled towards the US too. Even though, I mean, I could see clients on that side too, but it's just the market is much bigger in US and it's much more active when it comes to business. And of course, you bring in tax advantages, all kinds of other things. It makes sense. Especially if you want to live in a warmer region.
Definitely.
I keep getting pulled into because of the lifestyle as well. So that's part of the reason. I'd love to hear before we go into some of the details on the business side. I'd love to hear. I know you got started. I mean, good thing the language has been in your family, real estate, and you heard that. But what drives you now? I'm curious. Like what gets you to wake up and do all the things that you're doing?
Yeah, if success leaves clues, it's evident that some of the most successful people they have really realized their why, and what motivates them, what gives them the enthusiasm to want to be successful. I haven't really discovered what the reasoning behind it is. A lot of times people say when you have kids, it's kind of motivates you to do better. I think I was always driven. I think I was always motivated to do better and achieve success. Well, now that means different for different people, but business success for sure. I feel that a lot of times successful businessmen create a lot of jobs, men or women. Successful business people create a lot of jobs. They do a lot of giving back. They do a lot of altruistic missions and what have you. So that was a driver for me to build something great, to create a lot of jobs, to make an impact in the real estate space. So it wasn't one specific thing or one motivator. It was just success in business to be able to do a lot for people and make a dent in the world, really.
Awesome. I love that. That's a good enough motivation. Love it. And reason. These are the times when I remember this quote from Warren Buffett when he said, when people get greedy, become fearful. When people become fearful, get greedy. That's kind of what comes to mind whenever I talk to my clients, who are a lot of them are in the multifamily space. And I hear both sides of it. It's like those who are like looking for opportunity right now. Like, yeah, there has to be opportunity, even though they see that they need to look more, but they are kind of looking and they're biding their time, like opportunities are coming around. And then the other side of it is, and then I'm talking about on the GP side, And the other side of it, those who have completely shrunk back, they've gone through some really bad deals in the multifamily space with the interest hikes and all kinds of stuff that has happened, and they're still struggling to work through some of those. And you could tell there's trauma involved in that process with them. They're like, I don't know if I want to go towards this at the rate that I was. So if you were to look at and add to that the effects of war, new technologies, take AI in the picture that's accelerating at crazy rates that nobody knows where that's going. What are you finding are the effects of those things in your business, and how are you talking to investors about this stuff?
Yeah, just putting away the recent items such as war and AI, and just going back and looking at the multifamily real estate cycle currently, even prior to AI and the war, multifamily real estate cycle is currently in a bust cycle. And this didn't really start recently when the subprime mortgage crisis in '08 resulted in the U.S. economy nearly collapsing. The real estate prices dropped nationwide in the U.S. On the single family side, they dropped nearly 30%. But on the multifamily side, there was big issues as well. There was debt had dried up, so there wasn't a lot of opportunities. There wasn't a lot of drive for investment firms to look into do deals or put together funds. So real estate was definitely, and multifamily was in a bust cycle. But from 2008, the market bottom didn't really come till 2011. Finally, in 2011, the market started picking back up and prices started increasing. So the bottom of the market was really in 2011. From 2011 to 2019, the multifamily and real estate market in the U.S. just went on a bull run. An unbelievable run. Many firms did tremendously well. Syndicators, funds, private equity firms, REITs did really well in that time. But by 2019, there was already cracks forming, and it was always already evident that the real estate cycle was in mania. And at mania, what happens, experts talk about this phase of this cycle, is that there is multiple offer situations taking place. People are paying low cap rates for deals when they know that's not really what is worth, and you have this over exuberance that's taking place in the market. So we saw that in 2019 already. So it felt like there was going to be a correction or a recession coming through. But soon after, as we know, COVID hit, a worldwide pandemic, and resulted in a cataclysmic event. And most people thought that most of these funds and syndication groups were going to be bankrupt. Nobody ever imagined that the central banks around the world were going to print trillions of dollars and pump that into the economy, and they were going to bring rates to near zero. And so a lot of these syndicators, a lot of these groups survived, and because they got used to going on such a bull run from 2011 to 2019, they actually started, when money was cheap, they started buying more. And a lot of developers came online as well. So not only acquisition groups that were buying multifamily deals, but also a lot of developers started developing multifamily projects as well throughout the U.S., mainly the Sun Belt, in a lot of these growth markets such as Austin, DFW, in San Antonio, in Tampa, and other markets in the Carolinas. So you saw a lot of supply coming online. You saw a lot of acquisition happening at really low cap rates, numbers that didn't make any sense. And the mistake that a lot of these groups made was from 2011 to 2019, when they were buying multifamily deals, they were putting bridge debt on these loans. Bridge debt on these deals as a loan. Bridge debt is meant to take you, the name is really on it, right? It's supposed to get you from point A to point B. You get a deal that's distressed, you put bridge debt on it until you stabilize, and then you convert it into permanent debt. But the interesting thing about bridge debt is that it financially engineers your economics to be much higher, because it gives you a higher debt. It's usually for a shorter period of time. It's high octane debt. So a lot of syndicators, a lot of funds got used to putting these types of loans on their deals. And these loans come with something called a rate cap. A rate cap is an insurance policy that if your interest rate goes over a certain number, a certain percentage, that this rate cap kicks in. So, but rate caps expire. They're usually for 3 years. And they're, at that time, in 2021, 2022, there were really a nominal price to pay for a rate cap. So if you have a $15 million loan, your rate cap was around $100,000. But what started happening when the market started correcting and a lot of these rate caps started expiring, and when the time was now for groups to repurchase a rate cap, the price had gone up 10 to 20x to purchase the new rate cap. Now their property values had dropped as well, and a lot of banks were actually, and lenders were foreclosing on these properties, but the issue there was the concern that 2008 might repeat again, GFC might repeat. So government kind of stepped in and allowed the banks to do this idea of let's extend and pretend. So foreclosures didn't really materialize, and a lot of banks just called their lenders and say, hey, we'll just extend this for an extra year for you. So right now we're sitting in that phase where a lot of groups have bought properties at really low cap rates, high bases, and now their properties are worth less than the loan amount. But the lenders don't want to foreclose because they're going to be left with a property without an operator, and the property is worth just their loan amount, even less as well. And then the other issue that compounded it was the item with development. When development started happening and cheap debt, a lot of these units came online, and supply has a downward effect on rents and occupancy. So, then that resulted in property values even coming down more. So, multifamily is definitely going through the recession phase of the cycle. Prices have come down 30% in some cases. So, is it a great opportunity to get into the market currently? Is the market at rock bottom? We have a podcast. We bring on expert guests to speak about the real estate cycles and real estate market and real estate as a whole. And we have a question that we asked at the end of the show from many of these experts is that if multifamily in the U.S., if this market cycles were a clock, and 12 o'clock being top of the market and 6 o'clock being the bottom of the market, what time is it today? And the consensus over the last 12 months has been that we are very close to 6 o'clock. Is it either right before, right after, or right at 6? So it is a great opportunity to get into multifamily right now because the fundamentals are still there. Americans is becoming more and more a renters nation. Single family home purchase continues to become less affordable because of increase in supply and material costs and interest rates. So the next best thing is really multifamily and living in apartments. So the fundamental drivers are still there, but it's important to put the right debt on deals and make deals work and work with the right operator. So that's really where we're at right now in the market cycle.
And so how exactly and I know at least from the surface that I read on, you guys work more with LPs.
Yeah, exactly. So we're a real estate private equity firm. So the capital needed, the equity needed for our deal comes from investors that are limited partners in our deals, LPs. So it's not, we invest in our deals as well, but yeah, majority of our capital comes from investors on the equity side, and on the debt side, we of course borrow money from the banks and other lenders. So our capital stack is usually debt, and a portion of it is equity, which comes from limited partner investors.
So what would you say to these limited partners? I know you mentioned that there's still the opportunities there. You need to work with the right operators, but what makes you guys, for example, different? How are you approaching your business differently now in the current climate of the business versus other operators, let's say?
Yeah, absolutely. So I would say that LP investing, when it comes to retail or in some level institutional investors, is not always analytical. It's also emotional. So right now, the investor sentiment is definitely down. A lot of these LPs usually invest with a few different groups, and they're having a difficult time with some other groups they've invested with. So either they've lost money, or there's been a situation of capital calls. So the sentiment is definitely down. You use the phrase, but I use the phrase of more PTSD. Right now, there is PTSD in the market. There is obviously the Iran war that we're currently going through. It's difficult. I would say that what sets us apart from other investment firms is that we have a very intimate relationship with our investors when they come into our funnel, and they eventually go through a qualifying process with our investor relations team. It's a very intimate connection. We send out aside from that initial call and onboarding process, when we learn about the investor's motivation and their, as far as the liquidity and their drivers to want to invest in these private equity type of products, we create a really connection with them. Secondly, we we also create a lot of educational information. So every Sunday at 6 a.m. Eastern, we send out a educational email about what's happening in the economy, what's happening in real estate, what's happening with CPI, how many deals we're looking at. A lot of our investors also repeat investors, so we get a lot of referrals as well. And we haven't really been a firm that has done a lot of deals when the Fed was increasing rates from 2022 to 2024. We really sat on the sideline for 24 months and we didn't do any deals. And we've been very selective on the deal side. In the last 3 years, we've done 2 deals. That's difficult for a boutique firm to retain talent and still not do the deal volume, but our reputation and long-term growth trumps doing deals and making fees along the way. So those really has been the differentiating factors for us to have our investors still have the trust in us and want to invest and be involved in our deals.
No, I love that. I love the fact that you guys are leading with value. Your process is relational in nature, which it should be, because we're talking about a high ticket process and people putting their hard-earned money. And I have multiple clients who've lost money as LPs and deals, and they've gone through the whole capital call process as well. And all kinds of horror stories. I mean, some operators have been better in terms of their communication. Others, they don't even know what to do. And I'm directly working with some GPs who are struggling to make sense of, and they actually want to do it right by their LPs and other GPs, and they're doing their best to move forward in the current climate. So I love that approach around being relational. I mean, that's the case. I mean, my business is mainly high ticket. It's not on the investment side, but even on the coaching side, you're seeing the difference from a few years ago to now is the way people make decisions about investing in anything has shifted. And it requires an intimate relational process for them to know, well, why should I trust you versus the next person? Why is your process different? Why is this? I still see people investing in different areas, but they're much more selective, just like you're being selective with the deals that you're going into, which I think is smart in the current climate. So what specifically, what kind of effect has the war and the AI technology do you think has had on the generally the business side, but more specifically on the investing side?
Yeah, so the war is somewhat recent. Obviously, we're talking about a war in the Middle East, particularly Iran,
Yeah,
that controls
Iran.
the Strait of Hormuz, where 20% of world's oil passes through, approximately 15% of the world's aluminum, and more than 30% of the world's fertilizer passes through. So those are all commodities that are much needed in everyday life. As you can see, prices in gasoline here in Southwest Florida have gone up 30%.
Yeah.
I'm sure more in other places. We also have our marketing team out of the Philippines, and our some of our team members are talking about extensive lineups at gas stations and what have you. So it definitely has had an effect. Moreover, the other concern is also when it comes to potential inflation here in the U.S. With increased prices, and that really results in the Fed not lowering rates and possibly increasing rates. Commercial loans are indexed off the 10-year Treasury, which is a U.S. Treasury bond, and it's an organic market. So when we borrow loans, our lender says, "Okay, I'll give you a 200 basis point spread over the 10-year." So wherever the 10-year is, that's where our loan is. So the 10-year really affects commercial loans, and the 10-year has jumped close to 30 basis points over the last few weeks. So concerns with the war really affects everyday people and so on, and businesses as well. So a lot of times businesses try to hunker down a bit and not try to do big rounds of hiring. They try to be more nimble. So that really affects the economy overall. So yeah, so interest rates, investor sentiment, that's another part I said as well. The investor LP capital starts drying up when there is instabilities around the world and potential for even a larger war that could happen, right? So at any moment, the Iranians could, they're not the best at technology, so one of their missiles just could go wrong way and hit something it's not supposed to, and it might result in the U.S. Taking even a more extreme measure against Iran. So, yeah, those effects are really we're in a really dangerous phase right now with the Iran war. But compounding that with AI, which has been now around for a little bit longer, there is concerns about job losses. As we all know, AI makes everybody more productive. So is there a need for employment in certain sectors, such as legal assistant, for example, or people in the legal industry? That's been a demographic that's really a big concern for employment. Other jobs as well, in marketing, in many other facets, there could be a big concern for job losses. Productivity, the concern about job losses exists, but so that's a big concern, and the two are being compounded at the same time in the economy today. And then on top of that, you also have a lot of investment that has gone into AI. And as we know, and we've seen prior when it comes to internet coming out, when it comes to the dot-com bubble, when it comes to other technological advancements, there was always a big rush and a lot of capital coming into it, but there was always a bust that took place and a lot of people got wiped out. So the concern now is a lot of the AI companies that are out, are they going to be profitable? Are they going to exist soon after? So is there going to be a bubble within the AI space? So all of those concerns right now makes the economy really fragile. But so you have to be very selective in what you're investing in and what industry you're looking to get involved with.
Yeah, for sure. Going back to the war, I mean, this war, it was supposed to be a swift thing, according to the people who were saying it's becoming more and more complicated every day as you look at it. I think I was a meme going around with Donald Trump's tweets, where it's like, we've decimated everything from this to this, and then the next day something else happens. It's like, like what is going on over there? And the Iranians are not backing off. They have their own demands on that side, and it's becoming more and more complex. And like saying, all it takes is one bad move on either side, and this could go completely out of control. And again, that does make people nervous. Um, the other side of it is, and I'm looking at AI technology on in my business side. I mean, we're already thinking about like we're already using it on the marketing side. We're using it on the sales process side. Soon there will be agents I mean, there are people who are already using them, but as they become tested better, that'll be part of the process. Um, and I remember a couple of years ago, actually, not a couple of years ago, about a year ago, I switched one of the contractors I was working with on the marketing side, and I hired a new team. And I asked a simple question like, okay, we have this new technology. Would you be able to create like I don't mind continuing to work with you. Would you be able to create more content for the same rate, or you can change the rate, but I'm interested in more content. So what could you do in that process? And at the time, the company is like, well, we still want to keep our own process. And that didn't take long for me to switch that at half the price. I got more content from another team who was able to do that for me. And I mean, same thing with almost every process. Like the workshops that I run, the things that used to take me a week or two, it takes me like a couple of hours to do with a very small team. And it's becoming more and more bigger. And I think, what was it? It was one of the AI companies. There's on their marketing front, they have one guy in all automation, one of the AI models, and they were boasting that. So, my question is, how are you guys, from a business point of view, long term, how are you strategizing? How are you mitigating? How are you looking at this whole thing and saying, okay, if I'm going to be in this business for the next decade, how do I approach this? What's your approach from a business point of view?
Regarding AI right now, AI.
Regarding AI specifically, yes.
Yeah, no, with AI, I mean, currently our VP of investments, Paul Hopkins, is utilizing AI in our acquisition process. So that has expedited the process for acquisition. So with our acquisition, the way that it works, commercial real estate, unlike residential, there is no MLS. There is no platform where deals get listed. So every broker that has deals bring those deals online and just markets it to the group of investors and buyers that they know. So it's very, very selective in the commercial real estate space. And so we have our two target markets are Tampa Bay in Florida and San Antonio in Texas for on our multifamily vertical. So when deals come in, the broker usually sends an offering memorandum attached to the deal that has the specification. So our acquisition team has to go in there and they download the OM, they extract the information they need, they put it into our task management software, and they see if that the deal matches our buy box. And then the next step is that we do a back of the napkin underwriting on it to see if the asking price is anywhere close to what we're willing to pay. And if it then makes sense, then we'll take a step and do the full underwriting. That takes usually a few hours. But that whole process really takes a long time. And what our team has done is they have actually created with AI support where they just upload the OM and they've prompted AI, and AI automatically extracts the data they need. With Zapier, it connects that information right away to our project management software, and upload is exactly where they are. So the system automatically decides on if the deal matches our buy box or not, extracts the information, and then our team comes in and does the underwriting. Currently, the underwriting is obviously done through Excel models and what have you. Our team is still doing that, but that's also becoming more and more AI driven. So the process on underwriting deals, which usually took a few days, is taking a matter of a few minutes. Now there's still aspects of it such as doing rent comp studies, sale comp studies, online visits, which AI cannot take over. But the process is becoming much more expedited. So we can underwrite many deals in such a short a time, which allows us to take a run at multiple deals at the same time. So that's on the acquisition side. On the asset management side, when it comes to our property management softwares, again, a lot of these property management like AppFolio and other softwares are providing AI integration, so making the process much more streamlined and faster for us to oversee and manage our properties and oversee our property managers. On the marketing side, as you discussed, there's so many different things. Our marketing team is creating much more content, much more information in a much faster time, which results in hopefully more deals coming in. And overall, it's just been it's a new frontier. This is like I would call it analogous to when internet came out and how it changed everybody's life. I think it's the same thing happening here, which is one of those monumental moments in human history where technology is going to change our lives. Much more for better, but in some cases, there's going to be also some difficulties as well. Every time we've had fears that technology is going to completely get rid of jobs, which it has, but it has also created other jobs. There's always also been other jobs that we never thought about being there that has created. For example, online influencers. We never thought about these people that are online influencers that
Imagine
are
going
making.
back in time talking this.
That's right. So there's a lot of jobs that we don't know about. Life's dynamic and life's situations might change. There might be occupations and jobs that we never even imagined that needed to exist. But obvious that a lot of jobs will be, will be unusable really in a soon period of time here. But the great effects of it is there as well. So super excited about AI.
Yeah, me too. Me too. There's definitely a lot of opportunity here, and of course, it brings all kinds of changes. And change is never easy, even if it's exciting. It can bring, I mean, just pivoting in a given situation, whether it's in business and life, it requires a lot of adaptability. It requires effort. It requires at least upfront effort, and then later on it might pay off. But that's the part where a lot of people might not go towards. I'm curious from a personal point of view. Now, I know your father as well, right?
Yes, I am. Yes.
Yeah. So how are you thinking about it? Like how are you talking to your kids about this stuff? I don't know how old your kids are. Like how is this when I look at the world of AI and I'm looking at my education versus when I'm looking, I'm like, I don't know if the education system will do much for my kids if they're not prepared. I mean, I was talking to my nephew the other day. He's in high school. Yeah, I actually hired him to work for me on some of my social media stuff too. I'm like, what are they teaching you about financial literacy? What are they teaching you about the AI world? How are they looking at it? And it was a few months ago, actually in the beginning when AI was coming around, a lot of these universities were trying to ban it, and they kept coming up with solutions. All these students coming up with different ways of overriding their because they had AI detectors. They found a way to override that. Eventually, this was recent, a few months ago. They now the universities are saying no, you can use AI, but you can use it this way because they couldn't find a way to block it. And now you're looking at it in high school and other places where now they're still. When I asked my nephew, they're like, "Oh, we're not allowed to use AI for anything." Like that's interesting. I don't know if they know how the world is operating in the education world. How are you thinking about that when it comes to your children and their future and all this stuff?
Yeah, unfortunately, in our world, there is different levels of education, right? I was never privileged enough to be able to go to private school, but a lot of people go to great schools, and it's really a different caliber of teaching in different schools. So it really depends where you're going. I'm sure in more of a high caliber schools, there will be some levels of AI teaching and AI prompting. But when it comes to my kids, yeah, I mean, there's going to be the academic route where they get their teachings from, but there's going to be also outside of that academic route that they have to learn and educate themselves. My sons are 1 and 2 years old, so they're still fairly young
No, they're so
to
young, so
yeah, to be able to kind of get involved in AI. But yeah, I mean, computers, AI, some level of programming, those are all super important aspects of life. I remember I'm old enough to know that there was a time that they weren't allowing us to use calculators in school, right?
right.
And you had to do arithmetic with our pens. So, but now calculators are just a commonplace. It's just normal. It's unusual to not use a calculator. So I think AI will be the same thing. It'll just be a tool that we use to better ourselves rather than cheat in our exams, and to be able to be more productive and to be able to expand our minds farther. It's the velocity of technology is really mind blowing. I always look back at when it comes to human flight. It was 70 years from the first Wright brothers flight to the first mission outer space. I mean, when you look at that velocity of the progress that we made, now imagine our world 70 years from now, and when you have Neuralink and other aspects with robotics, it's going to be a very incredible world. But we also see some aspect of this bird today. A lot of these highly educated jobs or careers or academic pursuits are being trumped by blue collar people. For example, electricians and plumbers. They're saying that those are going to be the guys that are going to be the next millionaires, because a lot of people don't really work with their hands and what have you. So that's really taking place now. We'll see. We'll see what happens, but yeah, when it comes to my kids, they'll definitely be. I'll do my best for them to go to the best schools possible, and I'll try my best for them to have any extracurricular activity where they can learn about AI and expand their minds. Really,
Yeah. It reminded me what Simon Sinek recently said. This was like a few years ago when the automation came into the picture. A lot of the white collar people would go to the blue collar people. Well, you just need to get retrained. Now I think it's happening the other way around.
that's right,
Blue
exactly,
collar workers are gonna like maybe you need to get retrained, except there might not be a course for you
exactly.
yet. But that is an interesting turn of events. I mean, in all these things, like one of the first things that comes up with for people is fear that something is going to go wrong. But I look at it at least from a opportunity optimism standpoint that I mean, human beings have gone through much worse than than what we're going through. In fact, if you actually study history, you find out that we're not doing so bad compared to what we have gone through in the past. And it's very easy to get overwhelmed with all the crazy things that are happening, mostly because we know too much about the world. Like a few years ago, we didn't even know what was going on in most of the world. Now with social media and internet becoming so open, and add to it now AI, people have more information and they can make sense of information, and then they can get confused and rabbit hole into AI around it. We're getting exposed to a lot of information. So you might not even know as human beings how to decipher all this stuff. But my hope is that it takes us towards something positive. I'm curious. I'll ask this one other personal question. If you can imagine yourself, let's say in your 80s and 90s, let's say you've created the life that you want, you've created the career path, you've raised kids, grandkids, you've created whatever you've wanted to, and you look back, um, and you want that to be like whatever that the feeling is, whether it's fulfillment, whether it's success, whether it's joy, whatever it is, you want that a version of that model to be a legacy for those around you. What is that for you? Like, do you think about that ever, or
As far as my achievements, when I am
yeah,
in
whether
that
whether
age,
you're looking for whether that achievement is success for you, joy for you, fulfillment, community, whatever that is. Like, what is that thing that you want to leave behind for those around you?
yeah, I mean, legacy is a big part, obviously, with when it comes to is the opposite of nihilism, right? Building a legacy and having a legacy and for your name to live on and your family. So, I think family is a very important part of it. The company that I'm helping build is another very important part of it for that company to continue to grow and continue to create jobs and do great things within the real estate space. When it comes to my family, for them to be involved in the company in some capacity. My dream is always for my sons to be involved in politics. So that's something that I'm going to be, giving them the tutelage needed for that to be involved in politics in some capacity and bring the Biniaz name, in some space. They're both born here in the U.S., so they have the birthright citizenship as far as U.S. citizens. So I hope to get involved in politics in some capacity. But yeah, I mean, if it goes back to this idea that if you want to change the world, you should start first with making your bed when you wake up. So following the same concept, I would want my family, my immediate family's um, um, you know kind of organization and my immediate family's uh, uh, union to be a very, very organized, very successful, very healthy, and then from there, just build a great company that affects a lot of people, employees, tenants, the consumers that use the services of that company. And then hopefully, if my sons do eventually get into politics, for them to, make people's lives much better. So that's the legacy I hope to leave behind. And I think about it. I think when I was in my late 20s, I did have a vision as myself as this person in his frail in his 90s, and he didn't have the physical attributes to be able to, run or do hikes or go skiing. So it really gave me the drive for me to be very healthy. So I go to the gym every single day. I try to eat as healthy food as possible. I haven't had a drink of alcohol in over 16 years now. My wife, she's been married now for 6 years, and she hasn't drank for close to that time. Maybe on our first few dates, she had a few drinks, but since then she hasn't had a drink. So we hope to continue that lifestyle for our kids as well. So they never have to drink or do anything else as well. But yeah, that's really the legacy I hope to leave behind, is of success, of health, of happiness, of adding value to people around you and the world at large.
It's incredible. I love that. That's beautiful. And that's I'd say a version of that I've thought about with my kids are a little bit older. They're 10, 6, and there's a 10-month-old. 10 years old, 6 year old, and 10-month old. And the
Oh, well,
10-month old
congrats.
is a son, two daughters on the older side. The older one, she's about to be 10. I'm like, you're gonna start working for me pretty soon. She's excited. She's like, I want to do video editing. I'm like, okay, okay,
Nice.
that's fine. Everybody in the family wants to be a video editor. You
Cool.
guys might have to form a team around each other.
Yeah.
Super excited to see them grow up. And one of the coolest things I think about, like at least for people who do this, they have podcasts or share their message. Well, your sons will get to hear you share your vision on these podcasts. I'm sure you've shared it many times. But the cool thing I think about is whether they look into an AI platform and the AI suggests, "Hey, here's a video where your father talked about the vision," which it shouldn't be hard to find that with those kind of platforms. But that's the coolest thing to like your son, grandchildren, or great grandchildren. They go back and say, "Oh, this was thing." None of us have that. I don't. I only have a picture of my grandfather up on the wall, but and he was at least one of them. He was a judge and he had a lot of influence. But I never knew him. He was long gone before I came into the picture. But I always think about it, like it's really cool that for our children or great grandchildren, they get to go back and listen to, well, what was my dad up to? What was my great grandfather up to? It's I think it's a blessing that we have that we can directly share that message, and they can directly see us changing our mind as we're going through the process. Because I go back to my videos from 10 years ago, I've changed my mind several times about the things that I th thought about, and I've grown, evolved. And I mean, business shapes you, leadership shapes you, people around you shape you in so many ways. But it's a overall, I'd say it's a cool world we live in.
Absolutely. Yeah.
Yeah, yeah. Well, I want to thank you for being on this podcast, and I appreciate you taking the time to do this. Where can people find you?
Our website, cpicapital.com. I'm very active on LinkedIn. So August Biniaz on LinkedIn. Yeah, send me a message. Tell me let me know you see me on the show. Happy to book a call. And yeah, those are the main two places probably.
Awesome. Is there any other message, any last words on this podcast that you want to share?
Yeah, I mean, last words is that really for when it comes to investors is being focused and understanding the asset class they're investing in. Currently, the environment is somewhat shaky, so they should take steps carefully. When it comes to it, just broadly, last words is really health and family comes first, so can always build something great above that.
Yeah, for sure. Completely agree with that. Thank you for being here. And please, anybody listening to this, share this with other investors, family, friends, whoever is thinking about investing in the multifamily or investing in general in real estate, because August has shared some incredible things here for you to think about and pay attention to. We are going through an interesting time in technology and economy, war, all kinds of stuff, which requires us to make intentional decisions. Doesn't mean you should be scared. It just means you need to be more informed than you were before. I'll leave it at that. And until my next conversation, hope you all have an incredible day. Bye.